The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's voice is very, I think he's got strep or something like that, so he's not going to be able to be here today. What we're looking at, and of course, no one can step in for Larry and do Larry's work. It's almost impossible with all his experience, etc. But let's just do the best we can. I want you to go straight to wheat. Das Wheat. We're looking at, that's Wayfair. We don't want Wayfair, we want wheat. There it is. This is the continuous contract. Let me just talk about some of the things that I've been discussing, and then we'll go through it because it's really important that we look at what can happen with Ukraine being a really very large producer of wheat, exporter of wheat, and many of the other grains. I went through this just recently. I don't think I've got it right in front of me. All the different things that they have. It's a viable, it's an incredibly viable country. What's going on now is just, it's a tragedy of both human proportions, but unfortunately political ones as well. And you can get into it as much as you want. The reality is, looking at the scenario, what us as bystanders just sitting in our armchairs looking at TV, what we want to do and what is being done and what can be done, sometimes there's a void. It sounds like it should be easy to resolve, and somehow this is not easy to resolve. So all I can say is that a line of 40 miles with military vehicles, and even if you look at movies from the 1950s where they would strafe those in a straight line, it comes to mind. I just don't know how they are still there, and we couldn't have had drones or whatever it is just to do the work that they should be doing. So this is just a layman's point of view. Not sure what's going on. But that's the reason why I'm talking about it, is that this market is also saying we're not sure what's going on. Wheat screamed up after two gap up days, and limit up and stayed still at about 1209, and then 1219 or something like that. Let me just give you the figure. So 1209, 1209, and the next one was right there at 1294. And then the following day, 3 days ago, there's a gap, and it's just it spirals up as it's opened. It opens down a fraction, takes out the left side limit up high of 1209. It goes to, this is the continuous contract. It goes down to 1164 round number, and then screams up to 1363 and a half, and closes right here at 1280. Where's the close? 1286 and a half. And I said that this is, over the last, yesterday I spent a little time doing this, saying that's called the Chapman wave Roman candle. What is a Roman candle? Well, first of all, you know that candles for fireworks are, they blow up, right? So years and years ago, I discovered, I went once to one of Steve Nissen's courses. He's the one that really introduced America to candlestick charting, and he marketed this thing like crazy. And every single candle had something. Look at this. This one has a Mariposa candle, no wicks at all. I eventually, over the years, decided, no, you can't do that. Not every candle does exactly what it's supposed to do. There are certain candles that I look at that I love, and I use them, and most of the time use them fairly successfully. One is the small little plus sign, is a doji candle where it opens and closes and has a wick, a tiny wick up and down. Looks like a plus sign. That's number one. Number two is the long-legged wick where it opens and closes at the same price, but intraday, or intra-bar, I should say, it has a big move up and a big move down. All it does is it's like the day didn't happen. It just opens and closes at the same price. And Chapman Roman candle, where it opens, and normally there's just a tiny little wick. In this case, there was just a fraction, just barely a wick. And then it plunges down, and then it closes a half to 2/3 off the low of the long wick. And the rule of thumb is, if in the next bar, I usually say the next bar, but it could be 2 bars. Sometimes it's 3, but usually it's almost the next bar. If there is a continuation down and the price in a shorter time frame holds halfway into the wick or lower, there's just a really good chance that you're not only going to test the left side low of the Roman candle wick, that's this candle right here, but you're going to go even lower. Well, we did that today. We're down 111.5 points at 1090. The low today so far is 180 round number. So that's saying, on a purely technical basis, what we're looking at is wheat has had an extraordinary move. In just over 2 weeks, it's gone from around about 768, almost double, to the 1360s, and it's due for a technical rest. In the environment that we're in, what would you do if you think that wheat is still going to be, because no matter, once you get over 2 weeks in any kind of a war like this, you get into the 3rd week and maybe the 4th week without any direct leadership of any one of the various parties involved. This means it can go on for quite some time. So that says that wheat is in play, because the farmers, many they have to be fighting right now. If they're still remaining as farmers, they don't, they're going to get their products and just ship it? Wait, what are you going to do with it? I hate to say it, but we might see wheat sitting there, a lot of it rotting. This is a terrible situation. So I would look at it, and there is a tradable, and that is WEAT, which is wheat, Tukrium wheat fund. And it too made a high around about the 1250s. It's trading at 977 right now in a digestive phase. And all I can say is, in the bigger perspective, if you've taken money off, if you've had it in one of these products, I would just say you have to just wait for it to settle a little bit. It could have a pop, but the chances are that WEAT, the wheat fund, could pull back to the low 9s. If it takes out 9, it means something here is very wrong in the whole wheat complex, and we're not going to get, we might have to pay more for the wheat that's available, but there will not be extra wheat coming in, and that's an issue. So you'd think that scarcity would raise prices, yes, but it doesn't mean to say that product is getting out and shipped out. So I'm saying that the low 9.20 or $9 area is really critical for them. I'll be back in a moment. Basil Chapman, Thinkorswim, Larry Pesavento show. I'm only sitting in for the hour. I'm trying to do the best I can, going through these different commodities.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The opening call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Basil Chapman sitting for Larry Pesavento, and we're looking in the Tiger YouTube. A couple of questions. Let's see, Basil, they have, let me just see. Basil, they have been picking the more sophisticated weapons to shoot many of those drones, unfortunately. Oh, well, maybe that's part of it. Maybe that's why they don't use drones. I don't know. So a bunch of questions came in about gold. Where would we get into if we've taken money off or we have some part of it? What should we do? That's fine. But now, a couple of things as well that I want you to just deal with. So Ukrainians have banned any food exports to keep their food in their own country. Well, that makes sense, and that kind of is maybe what we're looking at over here. Now, Larry is his voice. He's around, but his speaking voice is. He had trouble yesterday, and it's really scratchy today, I believe. So he's not in. I'm sure he's probably, if he's listening, he's yelling and screaming. No, this is. Probably has a lot of opinions about what's going on right now, and he's not able to even express it. I'm sorry about that. Okay, so lithium, just let me show you Global X Lithium and Battery Securium, I think it is, fund. Isn't this interesting? Lithium, it's really needed, and yet, look, here it is in the lows. It is the 95 area, just back earlier in the fall of last year. And then what happens is it comes down in the weekly chart, and it's trading. The low was made a few days ago in the 667 area. It's trading at 69.86. Nothing much to see here. That's a very interesting thing. If you're looking at uranium, I was looking at 1, 2, 3, 4. Uranium. This is the Uranium Energy Fuels Uranium Inc. This really does very nicely. It's trading at 971, up 2 cents. And it showed up on a screen that I had the other day on And it's done very nicely. I would have expected it to be much higher. So energy fuels, uranium, this is what it does. UU is a symbol. I'm looking at many of these, and they're not really, I don't know. CCJ, look at this. Also, same thing, almost made its leg D in the weekly chart with a cup formation, doing very nicely in this environment, but I would have expected them to be much higher. Cameco Core, uranium energy, 26.91, down 14 cents today, made a new recovery high of 28.18. So a lot's going on. It's a very complex market out there. Look at this. So I did the wheat. Look at corn. Corn right now is trading at 7.49 1/4. It made a high in the Chapman wave notation. Look at the daily chart. Did very well. It went to 778, was it? Let me just check. It went to 750. Was that the high? No, 782 3/4. Holding the 9-period moving average is still looking very good. Weekly chart had an explosion to the upside, almost a 1-to-1 is one of the patterns we look at in Chapman wave methodology. G/C in the weekly chart, and only a leg C in the monthly. And look at this corn continuous contract. Look at this monthly chart. There it is. The previous high. Now remember, these get smoothed out. It's continuous. So the price I give you today might not be the same price next month, or the price that it was back in 2012 will be completely different. But the price and the action is all correct. So it went to this peak C minus at 870.5 back in August of 2012. That was the high. That was the cup formation that had a high previous to that of 2008, June, at 910 1/4. So it didn't quite make that. It made a cup formation, a failure. Look, the technicals were fading on that rally there. It plummets down to a low of 130. It was a low of 180.5 in August of 2020. And look at the speed with which it's been climbing. And this is a leg C. It's failed at peak C many times before, a couple of times before. Actually, many times. There's a peak C minus as well. See how the notation that I do, every single chart you ever see that I do that has notation, that's me doing it by hand. So this, you see all these letters, that A should be there, but it's not there because it got smoothed out. So everything is, it just misses it. It's like the template has just slipped, but the notation is staying in the same place. You'll see that in Apple. Look, Apple, look at this. These are all the notations of Apple before it split. And was it 5-to-1? I don't remember what it was split. Anyway, but everything else is correct except the price. So the chart formation, G/C in the monthly chart pulling back. Anyway, so let's get back to our looking at patterns. And what I'm saying is that soybean, corn, S, that's not the right one, S, has broken to new highs. So soybean continuous is only in leg B in the monthly chart, having made two peak Ds, one in around about July, August of 2012, at about 1450 area, then another peak D in the monthly chart in May of 2014 at 1477, pulls all the way back to the low of April of 2020 at 737.5, and here it is, over double at 1692 and still only in leg B in the monthly chart. So it should technically, in the Chapman wave methodology, it should go to a C and a D at least. So that's a big bull market in soybeans. Let's look at SB. I'm looking at these because the DBA, which is the DB Agricultural Fund, which subscribers are long from the 13s, has had a big move to the upside. And here you've got sugar moving quite nicely. Now, trend lines, I always say trend lines are just one facet of any technical tool. And if it's a long-term trend line, just going sideways, look, just going sideways takes you out. That doesn't mean to say it's a big breakout. It just says, hey, we're above that. We're above the 9-period moving average. We're above the 14-period moving average. MACD is good. Stochastic's lousy at 61%, but on-balance volume is very good. So it says that sugar is holding very nicely, but until it can trade on a weekly basis above 2130. This is just a counter trend rally back to the previous high, but it's still doing very nicely. There's your peak D, the fourth highest peak in the Chapman wave. Says just be a little bit careful. Let's go to crude oil. Crude oil is holding very well in the very long-term aspect. What we're looking at is the high that was made in 2008 with the Russia invades Georgia. You know, what are they? Anyway, August the 1st to August the 12th, 12 days in 2008. But although crude oil made its high in July, in August, it was already on its way down. It was a big red candle, and it was on its way down from the high. I didn't type it in because it always changes, but that was a high of 240.25 in the continuous contract of crude oil, plunges down to the low of February of 2009 to the 92 level, and then it rallies, and then it goes sideways for years, a couple of years, between 110 and 140. And then it plummets down to 39 in February of 2016, rallies to August at 85, and then it goes down to $7.61. You remember that April debacle. I'll be back. The Dow is down 425.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back, and this is Basil Chapman. I usually do the Tiger Technicians Hour, 10 to 11. My service is the opening call daily newsletter, but Larry's voice was troubling him. So I said I could make the time. I'll step in and I'll do the show. I also wanted to do it because I wanted to take a little time to go through all the different commodities, soft and hard and whatever. So we're looking at the copper continuous contract. The high that was made on a monthly basis back. Remember, these are continuous contracts. Prices get smoothed out, but the chart formation, everything else is 100% accurate, but the price will change, but nothing else has changed. So when I give you the price in next month, it could be completely different. If I gave you the price in 2011, March of 2011, I would not have said 5.0110. It would have been something completely different, but that's what we're looking at. 5.1255 was the high, February of 2011. Let's just have a look. I wonder if I can squeeze these a little more. Yeah, that's it. So copper had a huge move from 2008, late 2008, in the under 2 area, way up to the 5-ish area. Then it pulls back, it comes back down, holds the left side low. Beautiful trend line support. It holds it. It's called the Chapman wave inside track. Propellant zone, as long as it propels higher. Now, then it went under it. So it came back down in January of 2016 to 2.286, runs up to a peak E right here. This is a store when I was using small lettering. Peak E right there in the, that's the December of 2017, 3.55. Then it plunges much deeper down into 2020. I think it was March. Yep, 2020 low was 2.05. And now look at it. It goes back, and what is it doing? This beautiful dreaded H pattern that becomes a buy signal to a buy mode, and it's now in leg C, and it goes where? The high, remember, was 5.125. The high, most recent high, was in leg C in the monthly chart at 5.039. So it hasn't taken out that left side low. I had drawn this in some time ago as a left side, right side price time match, but I could not use the plumb line right here. This low right here was on January the 16th. Normally, if you're looking at an arch formation, you say if it's going to come back to where it was, either going back, or if it's, in this case, a cup formation. If it's an arch formation, then it would go from a left side low up and then back down to test that left side low. And you try to see if it can do it in the same number of bars. You try to get the ictus at the bottom. That would give you a proportionate. It did perfectly in the monthly chart, but only to the level that we were looking at of a high of July of 2014. That is the weekly chart. Yeah, July. No, it's a monthly chart. July of 2014 at 3675. And if you take it from this left side low to that particular low, I decided I would move it a little bit to the right, the plumb line. And we got there, and we did it, and we broke above it. And then I drew in in Chapman wave technique, I use it's called the Chapman wave inside wedge target resistance line. You see the left side, right side proportionate move in the cup formation, but it should have been right here. That would have been perfect, but it wasn't. I said, it's used up too much time going sideways. I'm going to have to make it to the right. And then when we made the highs over there in 2016, I said, let's join those in the Chapman wave methodology of the Chapman wave inside wedge target resistance line, and it went right to the line. But what I learned years ago when I used to hand chart pencil and paper with engineering paper with these tiny little squares, I've got them, I don't know where I've got, somewhere over here. I've got my Dow charts going all the way back to when I took the Dow Jones book, and I charted it from hand charted it from 1920. Anyway, so you can imagine when I got to the year 2000, when I was still hand charting, I had to join these pages together. I know I've got something over here. Let me see if I can reach it. No, I can't do it. It's right there. I can't actually get it without telling. Got this huge page, and I had to stick them all together. Yeah. So back at the ranch, what we're looking at is a high-grade copper made this long-legged doji candle high right here in February of 2011, plunges down, then took its time and moved up. And even though we made a lower low, this green trend line was still active. And when I used to do the hand charting, I was always impressed that A long time later, the trend line that I drew in suddenly became active. You know, I talk about this as 200-period exponential moving averages. When you put that in, you don't need to use it until you need to use it. But when you do use it, it's just amazing. Let me just see if anything's working here with a 200-period moving average. All right, that's not going to work. We'll see what happens here. So it made a peak E in the 1-minute E-mini. Oh, yeah, look. Look how it was resistance all the way. Look at that resistance for an almost 20, 30 minutes. And then we broke above the 200, this orange line, and then it became support. And then we pulled back, and where did we stop dead? Right at the 200-period moving average, and failed and drew that arch formation, the dreaded H formation. So that's how important these 200-period moving averages. You don't need it until you need it. And that's when it becomes really important. So look at high grade. Let's go back to this high grade copper we were looking at here, high grade copper, and I'll show you something very interesting. Look, high grade copper using the 200-period exponential moving average. Tell me, is this important or is this not important? Look at that. From the low that was made August the 19th of 2021, it went under it and ran all the way up in an arch formation, and then turned around, and what did it do? It made a higher low, testing the 200-period moving average. Then it made the pattern that I was expecting here was the lowercase h that can, if it holds the left side, become another lowercase h pattern and become a lowercase h that goes to a lowercase m. Well, there it is, right there. And it retested successfully the 200-period moving average. But wait a minute. It goes from a low high-grade copper on the 1st of, this is a day, the 30th of September, it goes from 4.07, and it spirals up to 4.6855 at a peak D, the missing peak D, right there on the price got smoothed out. So it's 4.839. That's the new price. The new price is 4.839 because it gets smoothed out. Doji candle, look at that. There's the Chapman wave inside wedge target resistance line. It broke above it, then it broke under it, and it came down all the way to the low that was made right there. Look at the 200-period moving average. Support, breaks down but closes above. Support, bam, it goes up, and it goes all the way to that peak C1, C2 on the 20th of January 2022. And then what does it do? Doji candle above the 200-period moving. Tell me that's not important. Just on a visual basis, I do things visually. Okay, so now what we've done is we skyrocketed up to the 5.02 area, 5.039, and that was 4 days ago, and now we're pulling back to 4.62. Okay, wow, we're moving along there. So the question came up about gold. Let's go to gold long term. Looking at gold, peak E in the Chapman wave methodology, the last peak F was a big sell-off back in around about the 15th of November, and we pulled back to the 1740s. I'll be back in a moment. Basil Chapman sitting for.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Larry's voice is a little bit under the weather, and I believe he'll, well, I'm sure he'll be back soon. I'm going to go to Mike in Ormond Beach. Mike, how are you?
Hey, Basil, I'm doing great. Basil, I've been trading in and out of the GDX very short term, and I'm looking at the low we made yesterday at 50, and it looks like there was previous resistance right at 36 before that, and I'm looking for a place to get back in. Do you think those levels will get hit, and what levels do you think would be good support for the GDX?
So this gives me an opportunity, because I completely forgot about it. I did some of it yesterday, and then today I forgot. I've got my chart showing right now, which has got the Chapman wave automated support and resistance lines. 3607 is the 120-minute support that I've got right now. But what's interesting is if you look at the monthly chart, the one on the right, you might not be able to see it, 26, 46, 27, 32, 97, 60 on the monthly chart. These are 20 numbers. Are extremely strong support. When I get a cluster, that cluster often becomes a magnet, and then you can become a reversal point. And I had the 29s also and 28s in the weekly chart. Now, on the upside, I don't have any resistance levels until 38 and 39 in the weekly chart, and we've already gone above that. We've already gone over 40. So I've had a number of people ask me about GDX. We either, like you, they've done shorter term trades, or some people said, I've got a core position, but I've gone in and out. We did, in this particular case, I've got my daily chart says a leg F in the GDX. It could be an alternate count, but that's pushing it a little bit. At this particular point, I can call it an F, because if it goes to a G, that's something else. The MACD is good. Stochastic's okay at 81%. I mean, that's very good, but it's not higher than that with prices at recent recovery highs. And the strength of the MACD is good, and the 9 is way above the 14. So what I'm going to say is, for all those people that have emailed me, and even in the Tiger YouTube and in the Den, questions about GDX, I'm going to suggest this, that if you've already taken profits in the GDX, normally I would be against just immediately going back in if that wasn't your plan. But I think that gold, the way gold is holding, and I treat gold as an icon of fear. Just it goes all the way back to where my late father-in-law, when he was escaping the Russians during the World War II, he had gold in his shoe, and that's how they survived, because that was the tradition, and that goes back generations and generations. So I'm just going to say to you, at this particular level, I would recommend having at least a little bit of gold, the GDX. This is the gold miners. Let me just go back to the GDX. I've got gold right there. The gold miners trading at 38.67. Even though if I'm looking at the commodities per se, there's a story involved with all of them. The only story that isn't involved in gold, just like the dollar is an international currency of respect. Gold is an icon of fear, and I'm saying going back historically, just into biblical days. So I'm going to suggest in this particular environment, with the market failing to even try to have a decent bounce that holds, gold is an area that I think, as part of a portfolio, I think at 38.71, if you're looking at the weekly chart, yep, the left side high, the previous high that failed, was at about 40. If you're looking at the monthly chart, is broken out, and the left side high is this is the GDX, the high that was made back in August of 2020 at 45.78. I'm going to suggest that at least some part of it, even here, even though we could see a pullback to the 36.2 points, I think that having some gold is important. So I just wanted to preface it. Now, on a purely technical level, the way it's acting way above the 9-period moving average and the 14, for gold to see the 9 break under the 14 to get a sell signal to sell mode, you would probably have to see 34.50 on a closing basis. That's 4 points lower. That is like 12% lower from where we are. In this environment, I normally I'd say let's go to yesterday's move down that was at 36.34 was it the low? 36.50 was the low. I would prefer to see a move down to the 36.20, 35.80 level to start your next entry point. At this stage, I don't know if we're actually going to do that, because there's nothing left. The fund managers are saying, where can I go? Dow's fading, S&P's fading, IWM is the Russell 2000. It's holding okay. I don't know if I really want to put a big portfolio into that. So I think gold is viable. So I don't know if I'm answering your question, because you could be talking short term. I'm just saying both short term and intermediate term, I think from the pattern that I'm looking at, gold is in play, and I don't think I want to mess around. And it's one of those situations that, look, if you had bought the gold at the 31 area and just held it, you'd say, hey, this is fantastic. You're at 38, 30, it's just 6 points, it's 20%. But if you're going in and out, I don't think you can make that same kind of money, because you've got to time it perfectly. So I know that there could be a pullback here, but I would start part of a new entry into GDX right here, saying, you know what? Okay. I think it's in play. It has 37.16 9-period moving average support. It has 36.33 14-period exponential moving average support. I just think that start the position here, and if it goes down, just then you must have a little bit of, if you buy it here at 38.62, just starting your new position, and it suddenly starts to 37.80, then I'm going to say hold it for a little bit. It should be coming back a little bit more, make an H pattern, and then hold successfully at about 36.30. That's kind of what I'd look for. I don't know if I've answered your question, but I'm doing the best I can in the sense that you have mentioned shorter-term trades.
Yeah, I was just asking for, the different levels of support that you see, and the nearest one right now is
37.18.
Right where we are now, you said?
Well, no, 37.18 is the 9-period exponential moving average support. That's still quite a bit of a way down, but I'm just saying there is such a chance that you could actually have another spike in gold over the next coming days if there's really bad news. There are very few places for people to go. So this seems to me is active, and I don't want you to miss out by suddenly saying, oh my goodness, it's not at 38.65 anymore, it's at 39.30 or 41. What do I do? This is one of those cases where I'd rather be there for the opportunity, and that's what I'm recommending. I hope that helps you.
Thank you, Basil.
Okay, thank you, Mike. It's always good to hear from you. We'll go to Rich in Oregon. We'll look at EXK as soon as I get back, and I'll talk about FCX, Freeport McMoran.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. We're going to Rich in Oregon. Rich, how are you?
I'm great. Thanks, Basil, for taking the call.
Pleasure.
I was looking at EXK, and they had earnings today, so they've had a little pop here.
Oh,
I was wondering what your
earnings.
chart was telling you.
So I've got a peak E, but the Chapman Wave instant restart at the 200-period moving average, which was resistance, then it became support, says this could be E/A. So are you in this at all?
Yes.
Okay. So I'm going to make 2 recommendations. One, I'm not even going to ask you where you're in. I'm going to say, if I was you, I'd keep that core position. And on a trading basis, watch this closely, because today's Thursday. Friday, we know gold can do all crazy sorts of things. But if your EXK, Endeavor Silver, wow, what a thing to find that Endeavor. Wasn't that called the Endeavor? That was the boat that was found 100 feet below the sea level. So what we're looking at is if this thing can hold halfway into the wick of today, not the wick, the body, in fact, of 536, if it can hold all the way through Monday without breaking under 530, I think this is acting very, very well. So at $5.51, EXK is a symbol, up 40 cents today, up at 551. I think this is one of those where you could even start a nibble small position to add to it as a trading position on any 20-cent pullback in the next day or two, but I'd like it to hold maybe 520 to 530. If it can do that all the way through Monday morning, there's a chance that this thing could very quickly pop to the 570, 580 area. Because as I was saying a moment ago to Mike, I think gold is really in play here because there's very little else that's working. So I like it very much. All I could say is, in terms of the core position, the reason why I like it is that weekly chart, this is a brand new leg A, and it's the first time that the technicals are kind of confirming. So it's holding very well. Hope that helps you.
Yes, thank you, Basil. Have a good day.
Thank you very much for calling. Folks, just as we go out, I had a question about FCX, Freeport McMoran. I think this is pulling back a little bit. It's at 46.75. It needs to hold 45 to 44 over the next 2-3 days, and then we'll see. We'll look at it again on tomorrow and Monday in my show. Have a wonderful weekend and have a wonderful day. I'll see you